Welcome to this Monetary Policy Special. The minutes of the July 8th Monetary Policy meeting are out, and the battle lines, so to speak, between the Reserve Bank members and Dr. Bhide on the one hand, and the two dovish external members, Dr. Varma and Dr. Ashima Goyal, seem to have gotten sharper. Remember, both these members, Varma and Goyal, voted for a rate cut, but they were outvoted by external member Shashanka Bhide, joining with Reserve Bank members Governor Das, Michael Patra and Rajiv Ranjan, who all voted against a cut. Dr. Varma and Dr. Goyal see a huge growth sacrifice in keeping the repo rate higher than warranted at 6.5%, while the Reserve Bank members and Dr. Bhide argue that inflation needs to sustainably move towards the 4% target for them to feel comfortable to cut rates. We are now joined by Dr. Bhide himself and Jayanth Varma and Dr. Ashima Goyal, the external members of the RBI committee. Gentlemen and Ashima, thank you very much for joining us. Dr. Varma, Dr. Bhide, I must tell you that Ashima Goyal is joining us from the airport. She's about to board a flight. So I'll just get a couple of questions with her and then come to you. Ashima, thank you very much. Well, I just want to say that you repeatedly say there is a growth sacrifice involved. Now, at 8.2 last year and well over 7% forecast for current year, where is the sacrifice?
Well, growth has reduced this year compared to last year, and it is also lower than the potential growth, because we are seeing that even with the high growth last year, inflation kept falling, suggesting that there is room to grow faster without it being inflationary. And given that we have a large number of young who are in low productivity employment, we need to grow faster in order to absorb them in jobs that make them happy.
Okay. Well, I take your point that this year the forecast is 7% by the Reserve Bank, 7.2 actually, compared to 8.2 in FY24. But the RBI's latest State of the Economy Bulletin paper is indicating that, they are expecting an upside surprise. Maybe it will be 7.4 or something. Over a high base of 8.2, a 7.4 growth is excellent, isn't it? You would still be unhappy?
I'm not unhappy, but, the other point is that monetary policy acts with a lag. And as I've indicated, if the inflation is 4.5 average and below that, the real rates will be rising towards 2%. And if they stay at that level for a longer period, it will damp growth to some extent in the future. And we have seen over the past year that with real rates at 1%, inflation has fallen, growth has been robust. And so why should we need to make monetary policy more restrictive? Yeah, when inflation is closer to target, it's at 4.5, right? The average inflation. So my argument is that we need to judge potential growth from the inflation. If inflation is approaching target durably, then we are not yet at potential growth, and we can afford to grow faster without it being inflationary.
Okay. Well, you are referring to two numbers which, perhaps are not done and dusted and settled. You are saying potential growth is 8, and you are saying neutral rate is 1%. Now, is that done and dusted? Way back about 10 years ago, people were talking about neutral rate at 2 percentage points, 200 basis. This one unity was during COVID. So can you be so sure of the neutral rate, or does it still need some, calculation?
Right, absolutely. I'm not saying that it has to be 1 and 8. Yeah, there's nothing, there's no way. There are a lot of factors that determine both the neutral rate and the potential growth. But I am just saying that an indication is that inflation is falling at a growth rate of 8%, suggesting that we can grow at such a rate. Yeah, I'm saying that we need to infer the potential growth and the neutral rate from the inflation figures. And as long as inflation is falling, is within our tolerance band, is approaching the target, it suggests that we are below our potential growth and above our neutral real interest rate. I'm not saying that it's necessarily 1 or 8%, but the fact that inflation is falling suggests that we can grow higher without it being inflation.
Okay. I'll let you go, Ashima Goyal. That's really kind of you to take time out and speak to us before boarding the flight. Well, Dr. Bhide and Dr. Varma, thank you very much indeed for your patience, and some of my questions will overlap. Dr. Varma, to you, sir. The point is the same. At 8%, we're doing damn well, very well. In fact, better than we thought. 8.2. Why are you still saying that you see dangers to growth? In fact, like I was telling Ashima, the State of the Economy chapter of the bulletin is speaking about actually 7.6% growth this year as a possible baseline projection.
No, you see, the official projection is what we go by, right?
Okay.
That's a projection which is there in the minutes of the MPC.
Yes.
That is what we go by. After that, people can say there are upsides, and people can say there are downsides to inflation and so on. There is a base case that one goes by.
Okay.
There's a base case growth, there's a base case inflation. There are optimistic estimates of both.
Okay.
So we go with the base case.
Okay.
Second thing is that 8.2 is a rear view mirror. What is the projection for 24-25? What is the projection for 25-26? They're both dangerously close to 7%, which is unacceptably low. Okay? And you are focusing on 8.2. I would focus on what is the cumulative growth rate from the pre-COVID year.
Okay.
That is the real base of which we want to grow. If the cumulative growth from the pre-COVID period is, something around 5% or something, then the economy is well below potential, even at the base level. So we are growing off a relatively low base.
Okay.
We are far below the pre-COVID trend. So that is the low base. There's a lot of catch-up to be done. We still have to recover from the growth shock of COVID.
Okay.
And it needs growth. It needs a lot of growth. And 24-25 and 25-26 are not showing the growth that is needed to fulfill the aspirations of 1.5 billion people.
Okay. So it is an unexceptionable argument that a large part of this growth has come because of the slack in the 2 years. We went so low that the rebound is very good. So I would take, yes, the 5% would, if you take the average from 2020, it would work out to 5%. But that's also a bit unfair, because what I didn't consume in 2020 and 2021, I am not going to consume that ever, because that time is lost. So if you take the average from 2003, for instance, when the two new series of GDP are available to us, then the average is working out to 7. We are growing, a little better than that, if anything. So hence my persistence that why are you saying we are, way below potential?
Well, what you're doing when you go back to 2003 is you're taking a number which shows the high potential growth that the economy is capable of. Pre-COVID, we were growing quite fast. There was a growth potential. There is no evidence to say that we can't grow at 8%. That potential exists. We need to grow at 8% to produce jobs for all the people. Where are we in the demographic transition? We are at a stage in the demographic transition where the workforce is growing rapidly.
Yes.
We need to give them jobs. If we miss this, then we are missing the entire benefit of the demographic dividend. If we get stuck at low growth, and there is a hysteresis there, if the entire economy gets conditioned to a low equilibrium trap, it becomes very difficult to push the economy out of that. it is extremely important to ensure that the whole economy doesn't get into that rut where everybody thinks India can grow only at 7%.
Okay.
If that belief can become self-fulfilling, it is necessary to jolt the economy out of that negative belief.
That is a very impassioned and, difficult to beat argument. I take your point that, at this stage, China was growing at double digits, even 12% in certain years from 1991 to 2008. And we are entering that phase with our demographic transition. Dr. Bhide, would you want to counter that? It's a very strong argument that, our potential at this stage should actually be well over 8%. So I think you're on mute, sir. Dr. Bhide, I think you need to unmute yourself.
Yeah, I'm not going to be countering that argument because I think the issues are clearly that the monetary policy at this time, in the context of what we see is the growth and inflation trajectories. So I think we have a high growth compared to what we have seen in the past few years.
Yes.
And we also see a declining rate of inflation, but it is still very not very close to the target. And in fact, in the projections, in 3 out of 4 quarters, we are closer to 5% than 4%. So I think so. In this sort of medium-term perspective, I think the growth that we see is closer to, I think, what we are likely to achieve. And the other point, I think, of course, is that, it is also, we are growing at 7%. We grew at 8% when the global economy was not doing well. So in order to drive this growth beyond something like 7%, we also need to have the external demand doing well. And I think so from that perspective, growth alone will not be able to give us lower inflation also. So I think if the point is that, potential growth is higher, and if you grow at potential growth, the inflation rate, in fact, may be lower because of the supply conditions. I do not think we see that. I mean, we do not see higher growth leading to lower inflation. On the other hand, I think we should be looking at lower rate of inflation in order to influence growth or stimulate growth. I think that would be my concern.
Okay. Dr. Bhide, one of the arguments made by the proponents of growth, including Dr. Varma, though he doesn't say it in this paragraph, is that our consumption is low. If you break up the GDP from the demand side, then consumption has grown only by 4%. It is capital, gross fixed capital formation, which has given us that bump up of 10%. So is there an argument that we are keeping behind growth by keeping the positive real rate at 200 basis points?
So I think what will accelerate consumption and what kept the consumption growth lower is in fact inflation.
Okay.
So decline in the rate of inflation is positive for growth. So I think it's important to ensure that we maintain this moderate rate of inflation in order to promote growth. The higher capital formation that we saw in the past, actually 2 to 3 years.
Yes.
I mean, one is on account of the public sector investment, and I think so. The lower rate of inflation is certainly necessary to sort of push private investment as well. So I think as far as the monetary policy is concerned at this time, it is the durable moderate rate of inflation that I think we are after.
Okay. Dr. Varma, see, the current MPC ends its term after the August monetary policy meet. Now, in these 4 years, we have not seen inflation at or below 4% for more than a handful of months. I think 5 or 6, if I counted right. Would not that be a regret that you want to leave it at 4 before you end your term?
No. You see, I think it is a mistake to bring personal agendas into such an important
It's not a personal agenda, sir. It is a given mandate. It's a given mandate.
We can't set rates based on what would make us look good. I'm sorry, that consideration should never be there.
May I rephrase, sir?
We as individuals will look good in the track record.
No,
the question to ask is what is right for the country? And, if we can do what is right in the country with a blemish on our personal track record, we should bear that as a bandit.
No. May I rephrase? Let me not bring the personal note. I'm just saying that the given mandate is 4%.
Yes.
And since we are still a distance, the argument that the governor and Patra and Ranjan and Bhide make is fair, that we have to see 4%, and we have not seen it sustainably over the last 4 years, barring a few months.
Yes, we need to see 4%. That is true. And until we get to 4%, monetary policy has to be restrictive. On that, there is no debate.
Okay.
But should monetary policy be at 200 basis points? Even at 175, it is restrictive. Even at 150, it is restrictive. Okay. Do we need 200? Nobody is talking about bringing it down to the neutral rate. Nobody is talking about that. Okay. What we are saying is that monetary policy needs to be restrictive, but it need not be as restrictive as we are pushing it to be. Okay. Right? That's all that we are saying. And what we are talking about, there is no disagreement that 4% is the target. There's no disagreement that we have to get there. Okay. But we have to also get there without unacceptable growth sacrifices. Fair. See, achieving 4% would have been easy if we were willing to sacrifice growth. At the peak of COVID, if we had not cut rates, then inflation would never have gone to these levels. It was a conscious decision that, given the beating that the economy is taking, we have to focus on the recovery from COVID. That was a very conscious choice. And those were unanimous decisions at that time, that we make that trade-off. What makes monetary policy so challenging and difficult is that we are constantly making growth inflation trade-offs. Yes. And the question to ask is, where does the balance of that trade-off lie today? And to my mind, that balance lies today at trying to conserve the growth potential of the economy, because inflation, though high, is still within the band. It is still within reasonable levels and is projected to keep declining to this. Something like 175 basis points will still get you down to target. Fair point. That's extremely well argued, sir, and I'm surprised that you did not convince the other members. We have to take a very quick break, Dr. Bhide and Dr. Varma. Just half a minute, we are back.